Hello everyone. Today's video is part 1 of drafting a transfer pricing policy. In this part, we'll be learning how to draft a transfer pricing policy. Transfer pricing policy is a document which is used to make life easy for a multinational corporation. As the name suggests, a transfer pricing policy is a document which highlights how an MNE would look at a specific international transaction from a group pricing point of view. It may or may not include a benchmark, depending upon the preference of the M&E management, but it surely includes and highlights a price setting model, which is used to price similar types of transaction through a remuneration model. For a step-by-step understanding on how to draft a transfer pricing policy, the following sequence and conceptual terms need to be understood. First, a walkthrough of the M&E. For the preparation of policy document for any situation, one needs to understand the scenario very well. Therefore, while you are preparing a policy document for the transactions that would be entered cross-border within the M&E group, it is essential to understand the M&E group itself. Such an understanding and data gathering may include knowledge of business, business segments, industry, holding structure, types of products or services offered by the M&E group, geographical locations, history in terms of transfer pricing and tax litigation, etc. Such an analysis may also give you comfort to compare the business model with other business models that you may have seen in your experience. Second, industry analysis. Once we have understood the subject well, it is essential to perform thorough research on the industry to which the M&E belongs. There could be certain business models that could be used in industry at large, and you do not want your M&E to follow a unique pattern which could be later challenged by the tax authorities. Further, the performance of industry analysis would also give you ready documentation when the transfer pricing documentation needs to be maintained. Third, undertaking a supply chain analysis. FAR, that is function, asset and risk analysis, should be taken up. It is an analysis of the functions undertaken by the respective associated enterprises in the group, assets employed by such AEs and respective risks associated with the transactions. Now, ideally, a legal intercorporate agreement is a starting point to FAR analysis, followed by management interview. But considering that you are looking at making a planning document in the nature of a policy, most likely the intercorporate agreement would not be available. And that is something you may have to draft after you get the policy up to speed. FAR are of various types, but it is the quality of the FAR matching to the exact scenario of the company is all that matters. FAR compulsorily involves two or more AEs and therefore cannot give only a unilateral view. Fourth, characterization. One would be able to characterize a transaction only when an appropriate FAR is undertaken. Undertaking an appropriate FAR would lead to characterization of transaction and eventually assisting in determining the remuneration model. Example of determining characterization of for a distributor could be high risk distributor, a licensed distributor, low risk distributor, commission agent, etc. Fifth, remuneration model. Once you characterize the entity, the remuneration model is something that is closely likely to such characterization. For example, if you are a distributor, you get a margin as remuneration. If you are a broker, you get brokerage or commission as your remuneration. In transfer pricing study, one often refers to 5 to 6 methods of benchmarking. It is important to note that these methods are not the only methods to test, but also fixation methods. The remuneration model could be fixed via cost plus method, yet tested through a TNMM analysis. Such a remuneration model is the final output and heart of the transfer pricing policy. The reason for the selection of a remuneration model also needs to be justified through appropriate business rationale and commercial substance. Now that we know the basics of preparation of a TP policy document, such a document is easy to comprehend with use to the business at large and to non-technical personnel at the M&E group. Also, such a document needs to be implemented, or else such a policy would be well drafted only on paper and not in reality. Hope you have enjoyed the part 1 and keep an eye for the part 2, where points that you should take care while drafting and transfer pricing intercorporate agreement will be covered. In case you need further help or assistance, please feel free to reach out to us at info@transprice.in. Until then, zooming out.